Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model for Thursday the 11th of the 2nd 2021. The time is roughly 0445 GMT, London time in the morning. Asian session coming to a close. European session about to fire up. Our lunchtime North American session. Right, now I'm going to make a start in a minute, but we just need to say that we cleared all our trades yesterday. We're out of the market, completely out of the market, at a reasonable loss, and we'll talk about that in a minute. Anyway, right, Wednesday then. Yesterday we had a unopposed positive driver in the pound at plus 46, and so we've got no backdoor flows, so you've got the opposing negative flows coming mainly out of the dollar, minus 19, next out of the yen at minus 16, and the euro was the negative rock at minus 11, and that was on activity of plus or minus 46. Intra-week then, more relevant because we're Thursday, we're getting nearer to the end of the week. We've got a negative unopposed driver in the dollar, minus 284, no backdoor flows again, and these flows are predominantly, we're going into the pound at plus 179, next into the euro at plus 55 and the yen at plus 50, and that was an activity of plus or minus 284. So let's look at intraday then. So this is intraday, which is today, which is Thursday the 11th of the 2nd, open to about 15 minutes ago. So what have we got? We've got yen, dollar, euro, pound, plus 44, minus 11, minus 12, and minus 21, plus or minus 44 for the activity. So we've got a positive unopposed driver in the pound, a negative rock in the euro at minus 11, a negative mover in the dollar at minus 12, and a negative secondary driver in the yen at minus 21. Right, so let's just quickly talk about what's going to knock it about. Right, today then is the start of this lunar holiday for China. It's the 11th right the way through to next week. When is it? The 17th inclusive next week, which is so that's that. We've also got the Japanese out on holiday, so the JPY. So end result is basically we're going to have lower liquidity today. We certainly had lower liquidity in the Asian session, but so that's one thing to watch out for. What's happening today then? Right, we've got US continuing jobs claims, which is tier 2. Which is so that's the main event, so you can see not much is going on really. And tomorrow we've got Friday the 12th, we've got GBP GDP, which again is difficult to say, but that's what we've got. So and Michigan consumer sentiment. Right, so they're both tier 1 events. So you've got a tier 1 GBP GDP and Michigan consumer sentiment. Right, next week then, Monday's pretty light, and Tuesday you've got Euro GDP. So that sort of boxes it in for you. Right, so let's just have a quick look at what happened yesterday then. So we've got the unopposed positive driver in the pound at plus 46. relatively low activity, but that doesn't explain the whole picture. That pretty much was the final nail in the coffin on our short pound trades. Anyway, we will talk about that very shortly. And then over the week we've had the unopposed negative driver in the dollar. So the dollar's been weak to the exception of everything else, and all the opposing positive flows have mainly been going into the pound again, which is the main unhelpful event as well, and euro and yen next. And so far today we've got the pound again still being stubbornly strong at plus 44 as the unopposed positive driver, with the yen taking the bulk of the opposing negative flows at minus 21. Right, so that's that. Right, well, I mean, we're not going to go into detail on what happened, but basically we thought we had a window of trading the pound short, and we did up until the Bailey MPC, Monetary Policy, Bank of England rates decision, and then it started to go rapidly downhill. At the rates, just prior to the rates decision, we were about 600 points to the good overall, and if we closed then, everybody would have been happy, but we hung on to it, and we actually added positions, and we ended up, what did we end up? Minus 3,400 points in the hole, and that was over approximately 28 trades, and so it's roughly, so it's approximately minus 121 points per trade. So that was good enough for us. We got the message in the end. We're out. So we might do a video on what we were doing there, but the gist of it is that we were going against our complex positional situation. The pound in a complex positional situation was operating at about 21 to 24% above the modelled floor, and so it had plenty of elbow room to come up, and that's what it did, and we were dumb enough to go the other way. So that's in a nutshell what happened anyway. So right, so let's have a look what might be happening going forward. Right, let's look. Right, so we've had, over the week we've got dollar, so we've got dollar, euro, yen, pound. We've got dollar weakness as the unopposed negative driver. Now this is clearly a continuation move. It hasn't been a floor in the dollar, so arguably, well, the dollar has potential to bounce, but we think it would now be neutral to weak. The euro then, well, equities have been certainly having an effect on the yen, but because of the dollar weakness, the yen has been relatively strong up until now, and now we're starting to see over the week yen has had strength of plus 50, but we're seeing a little bit of yen weakness. So that's the yen is going to be neutral to weak, we think. So you're ending up with a situation where the pound is strong still, and the euro is neutral to strong. So that's what's happening. Equities are pumped, oil's pumped, gold's sort of bounced, and copper's bounced. So and we're into this sort of lunar lull now. So what we're going to do is go away, put our heads together with a nice cup of coffee, and calmly reassess the market, and then come back with some longer term positions which we're going to be happy with. So hope that was useful to you. See you tomorrow for the daily briefing. Thank you.